Well, let's get across the market open. David Lane joining us from Ord Minnett. David, welcome to Wednesday. Good to have you on the show again. Let's start on Wall Street. Bit of a mixed session there. Tech stocks dipping. Ongoing concerns about those valuations. But then, of course, we've also got that anticipation of the end to the US government shutdown.
Yes, you're right, Andrew. Yeah, we're seeing the Nasdaq was a little bit weaker again last night with some of those tech stocks off. Obviously, a lot of profits there to be taken, so people are starting to take those and concerned about the level of markets and the level of those AI-related stocks, which are now about 40% of the overall market cap of the US. So I think there's every reason to be concerned there. But then, yeah, as you said, in the broader market, we saw a bit of a late rally, a bit of expectation that the US government will reopen within a couple of days. So a little bit of optimism that came through there. And European markets were a lot more positive. We saw those markets up quite well, but the UK market was positive on the basis that they're expecting another rate cut to come from the Bank of England. So the economy in the UK is not travelling too well, but the markets were excited by that rate cut.
All right. What are we seeing just in terms of that US consumer sentiment, though? I mean, is that linked to the shutdown? Because, I mean, it's not over yet. Obviously, that's affected holiday plans as well.
I think that certainly has had an impact on it. And the overall economy in the US is struggling, in spite of what Mr. Trump may tell us. The numbers that were coming out pre the shutdown were trending towards a slowdown. We haven't had as many data points out over the last month or so, but yes, certainly I think the US consumer is struggling there. We actually saw the US consumer numbers down at the worst for 3 years. So real contrast to what we're seeing here in Australia, because yesterday we actually saw the Australian consumer sentiment numbers up really strongly.
Well, indeed, on that front then, that was a bit of a surprise. What does that indicate to you, particularly for the retail sector going into Christmas?
Yeah, I think overall it's quite a positive thing. And as you said, a bit of a surprise. We have been negative or cautious about the retail sector for quite some time, and analysts have been concerned about the potential slowdown for retailers for really a couple of years. But I think the consumer spending and consumer sentiment seems to go against a lot of that analyst discussion. And I think that's partly due to the wealth effect that we're seeing. Very strong property prices. Obviously, the share market continues to perform quite well. On balance, most people are gainfully employed. So I think most people are feeling that they've got a reasonable basis to be able to spend some money. We did see that rate cut earlier in the year. And ironically, I guess what we're now looking at is probably no rate cut from the RBA for the rest of this year, partly due to that strength in the consumer spending and keeping prices up relatively high.
So other than, well, in fact, I might get your pick then. What sort of retailers are you looking at the moment for potential value?
Yeah, it's tough because there's not a lot of value in the retailing stocks. I think the positive sentiment is good for retailers, but many of the traditional retailers, the Harvey Normans, the JB Hi-Fis, etc., are fairly expensive. The ones that we like Beacon Lighting. We think that they're reasonable value at the moment. Universal Stores looks quite attractive at current levels. And the other one that we quite like on the retailing front, heading more in towards your consumer staples, Metcash and even Woolworths. I think Woolworths, now that they've come off fairly significantly and starting to report a little bit better, we think that Woolworths looks reasonably attractive as well.
Outside of retail, with that consumer sentiment in mind, what about, and heading into Christmas, what are you seeing as far as those hospitality and tourism stocks? And just in terms of tourism, we have had Flight Centre out this morning as well.
Yes, and Flight Centre, they've got their AGM today, and Screw Turner's been making some announcements, and it actually looks like they've had a fairly positive start to the financial year. Their total transaction value was up about 7%, and that's despite a 5% cut in their headcount. And Screw Turner said that both corporate and leisure travel are looking fairly robust, and that there's been a noticeable increase in leisure travel. So I think that augurs well for Flight Centre. So we might start to see a bit of positive movement in their share price. And on the airline stocks, we think that both Virgin and Qantas are attractive. And then a couple of the smaller tourism stocks that are looking interesting as well. EVT, which has exposure to obviously Event Cinemas, but then Thredbo and a range of other hotels. And Coast Entertainment. Coast Entertainment's the one that owns Dreamworld down at the Gold Coast, which has actually been experiencing some very strong numbers. So there's a few tourism stocks that are looking interesting there as well.
And on top of that, also, I see perhaps you're seeing that logistics businesses could benefit.
Yeah, absolutely. Yeah, we're seeing a lot of economic activity around Australia, and as you said, heading towards Christmas. We've got the Black Friday sales, which seem to almost last for a month now, heading into that Christmas festive season. So, yeah, the logistics businesses will be very busy. Brambles continues to perform very, very well, and we like it. Cube Logistics is a really well-managed business, and also Lindsay Australia, which is one of the smaller businesses, but we think that there's quite a lot of value in Lindsay. So I think heading into Christmas with a reasonably robust consumer sentiment, those stocks should do relatively well.